All right, back live with you tonight. Before we get into our conversation, let's recap for you what we heard earlier on today. The manufacturing, transport and finance industries helped South Africa's economy from avoiding a technical recession. Gross domestic product data out from Statistics South Africa showed economic growth of 0.4% in the first quarter of this year after a 1.1% decline recorded in the previous quarter. Business reporter Ntokozo Khumalo filed this report.
8 out of 10 economic industries in South Africa contributed positively to gross domestic product in the first quarter, with Stats SA revealing a 0.4% jump over the period. Surprisingly, manufacturing was the biggest booster of growth in the first 3 months of the year. In the last 3 months of the last year, the sector was one of the negative contributors to the 1.3% decline in GDP.
It was largely driven by 4 industries, that is manufacturing, finance, and of course personal services, as well as trade. But now let us look at manufacturing, which contributed very strongly in the 0.4%. It contributed 0.2 of a percentage point. That was largely in the area of manufacturing of food and beverages.
However, analysts do warn to take the recorded growth with a pinch of salt.
This is merely a partial reversal of the contraction that we had in the fourth quarter of last year, and it is still generally quite weak. So while many sectors have performed slightly better than the fourth quarter of last year, they are in line with, or in many instances slightly below, the third quarter. And if we take any kind of longer term trend, we can clearly see the lack of general growth in the economies.
ABSA's senior economist Mielani Maluleke adds that avoiding a technical recession this time does not mean the economy is out of the woods just yet.
Avoiding falling into a technical recession in the first quarter doesn't really mean a huge amount. To be honest, we still believe that this is a year in which we are not going to see the economy grow by more than 0.3% overall.
Intensified load shedding and new risks, including possible sanctions and capital outflows, remain challenges in the economy and could impact growth for the rest of the year. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Pretoria.